All right, let's jump into it. It is 9:55 on the 11th of Feb. It's sister's birthday, so happy birthday to her. I'll send her a message later. All right, let's jump into it. It is. We'll start off with gold here. It was such a quiet sort of session, quiet, sort of choppy kind of sort of session yesterday. So, like, just to unpack it a little bit, I mean, we had that kind of sort of drop down on open yesterday, so I'll probably pause it just to see if we get some sort of repeat of that price action today. Most likely, well, most likely we'll get nothing, but if we had a big drop down yesterday, bought straight back up, maybe we'll get a big spike up today and then sell back down to it all. But it was an absolute grind yesterday. So the trade I was kind of looking for, as you can see here, was obviously a sort of close down underneath this 49.80 area. It came down, kissed this area perfectly, and then obviously up and then just danced around the whole time. Looked for a close up above, sort of say 5100. That didn't come either, and it was quite a frustrating kind of session. But as you can see, I mean, the levels that we were kind of looking for, well, it came a little bit shy from that, but really came up, kissed the top side here, and then bang, straight back down. And as you can see, it's just just consolidating really, sort of through this whole sort of period over here. So I think that's still the trade. So I guess we can move this up here a little bit now. Which if this is to sort of ring true in the sense of this sort of rising support, probably would work a little bit better. Boom. That's still kind of the play if we can get a push back down to the bottom side here. So to sort of unpack how it could potentially play out. If you do get this close here and we get the move down here, this is the section to look for to see if the buyers are really going to come in or not. Because this will be your make or break for it all. This will be the area where you go, okay, yep, the buyers aren't there. So, well, if in this scenario, the buyers aren't there, okay, fine, we're breaking through. Where we're looking to, we're looking where the buyers had been previously, which would be Friday sell down lows, which actually turns out to be previous Friday and also Friday we just passed, both really sort of holding that level line there at 46.80. So should we get a sort of break through this zone? Should we sort of, first things first, should we get a sort of a close underneath sort of 49.80? Your target in the immediate pretty much would be around that sort of 48.80, which is about $100 or so, in line with this sort of rising support, in line confluence with this horizontal support through here, and then sort of see if the buyers are going to then sort of step in from this zone here. Excuse me. We have Euro just cooling off there a little bit. Sorry, 2 minutes too. Yeah, so if we do sort of come back down into this area, this is the area to watch in that because there is a good chance that obviously, this sort of little pattern does repeat, i.e. the buyers sort of move through here, hold this sort of support and then bounce up here. And then we could be seeing, as I said yesterday, potential for a bit of sort of like a ascending triangle like this. And if you do get that move, if the buyers do step in at this zone here and we come back up and tackle 5100 that time, that's most likely the time that you're going to get a breakout. And look, if you do get a breakout, you're probably sort of, as I said, you're looking up just off from the top of head and that, probably around that sort of, 53, 5400 or so. So I think the implications of a break and a hold above the top side over here are quite big, should it, when it, whatever comes. But as I said, I think particularly if we get the pushback down 48.80, although thereabouts this area over here, this holds, and then a rally up there, I'd be a lot more confident of this thing breaking out at that point. Structurally, this sort of coming up here and then sort of rallying from here right now doesn't look as neat a kind of it just doesn't look as neat a sort of structure as you kind of sort of would expect from the other one. 2 seconds, we just got the market opening. Jump back into it. It seems like a fairly sort of placid kind of open. This is probably the calm before the storm, and then probably just go bang or bang in 2 seconds. But we'll see how we go. Where are we at? 50-30 or so on it all. But yeah, as you can see. So anyway, look back to what I was saying. Structurally, to me, it would sort of seem a bit more sound to have that kind of that and then a breakout here. but we'll see how we go with it all. It depends how sort of hungry they are for this, if they do want to sort of run it back up and that. But I think sort of certainly still, pretty much the same trade as yesterday. Close below 49.80, close above. Look, I'm going to say, not even just going to say 50.80 because obviously that was the resistance there, but we've also got this little tip over here as well, 50.90. So you'd really want to kind of get that close clear above that there to sort of see that sort of movement up there. But we do have NFP tonight as well. Obviously, NFP is going to be one of these sort of market moving kind of bits of data. So there's a good chance that we also just stay in this little range prior to that. And then we have that bit of data, that news, to then sort of shunt it one direction or the other. We did have sort of, I think it was Besant or something, come out the other day and say, don't be shocked by bad numbers. And this added to uh, the continued sort of sell down of US dollar, which has been absolutely pulverized. But again, what I've sort of been saying, sort of with this, that like the relationship of the gold to metals, particularly, but in this case gold to the US dollar, sorry, um, is that sort of like it's a pretty inverse relationship. And you'll have periods, like I always say the rule, 90-10 kind of thing. 10% of the time they'll run together, 90% they'll run inverse to each other. But, when you get extremes, you should definitely see it reacting. And as you can see, more or less, gold has just been sideways while the dollar has been absolutely pulverized. It stabilized a little bit yesterday, but more or less than that, it has been absolutely crushed. And gold really should have been sort of trading up around 5,200 in this period, and it just hasn't. Which, it's just worth noting. It's not like a sort of, oh my God, this kind of thing with it all. But my feeling is if we do see a dollar recovery, then they're going to hammer gold. If we see a continued sell down of the dollar, then I think eventually that'll sort of click back into like its normal sort of correlation, and we'll see the sort of breakout here. But I think for gold to sort of really sort of start pumping up here, we're going to need a big breakdown on US dollar because at the moment the dollar's been breaking down and gold just hasn't reacted. It's just gone sideways, which it shouldn't. It should be sort of up trading around 5,200. So the risk, I think, is if we do see slightly better job numbers tonight, and then the market goes, oh, hold on, wait, maybe we got a little bit ahead of ourselves with how much we've smashed the dollar, and they sort of pare back a little bit of that. And then, of course, as they do that, well, they're going to get the flows from the metals and that, and that should give us a bit of a push down over here. So I think all that aside, I think there's a good chance we just sort of range through this session today. NFP comes out tonight. Strong numbers, we push down. Weak numbers, we push up. Inverse to what will happen with the dollar. But it's just worth noting that through this period, this should be trading a bit higher given how weak the dollar is. All right, let's move on. So have a quick look at silver. Silver, very similar in the sense of, I mean, we've got the little levels that we're looking for a close above, and yesterday it was really just grind, grind, grind. Tried to put some sort of sense to, we got a bit of a falling resistance, seems to be respecting here, kind of. I'm not a big fan of it, but it is certainly bashing its head up against this line quite a few times here. Look, potentially, I think, excuse me, you could see a little intraday move, maybe up to mid 32, so 82s or so. But again, look, not really anything other than just like scraps here at the moment. Really, they're still the kind of levels that we're looking for. So yesterday really just was quite a sort of abnormality, but like I mean, just in general, but particularly given how big the movements have been recently. To have a day where, it was really within what, a buck or $2 or something like that. It was just super, super quiet. So not really anything to sort of take away with this. I mean, if we have a look at, I mean, again, these things are quite small, but if you look on the small time frame, I mean, yesterday we had this, that was open. So we sort of went upward scratch, 84, down to 81 thing. So that was the biggest move for the day. The rest of it was just really sideways, and this one side today they've decided to open up and just push it up here a little bit. But I mean, you got to zoom right in to sort of see anything through this period here. So look, it's yeah, it's pretty much more just a bit of a waiting game. I think it's just going to be the same thing with gold, as with gold. Sort of wait for these sort of wait for the closes above sort of 84 or a close below sort of 77, which is quite a big sort of range in the whole scheme of things. Um, but again, I think the sort of the implications of the move after are going to be quite decent. Like I think sort of potentially if you get a close up above 84, you're probably looking up around 90. A close underneath sort of 77, 70, this kind of zone down over here. Uh, you've got a little bit of a zone through here at 74. But apart from that, you're probably looking down to sort of low 70s. So realistically, the move that would potentially be coming after this, particularly because these things, when they do sort of go into these sort of consolidations like this, you got to think there's a section of the market that are going, yep, it's going, whatever. You don't even need to be the crazy lot that are going to 200 now. You could say it's going to 100 or whatever. They're buying up here. They've caught this buy. They buy. Oh, you know what? I'm going to protect myself. I'm going to put all my stops down underneath here. Other people going, yep, yeah, I'm buying, I'm adding, as long as it stays above here. So there's going to be a whole bunch of stops here. Likewise, you've got the other side of the people that are sort of like, trailing the stops through these sort of moves here. And you know what? I'll put my stops here. Boom, it's consolidating. It could come up to 90s, most likely come up to 90s if it breaks through here. I'll put my stops over here. So both sides of this are going to give quite a big sort of explosive move because you're going to get stops sort of piling up both sides of this. So when these like consolidation periods do break, you're going to get quite an explosive move. It's just that obviously dead as a doornail till that. So look, I think sort of potentially through the session, maybe up towards 83. I would be surprised, same with gold, if we do get a break of either of these levels prior to tonight's data. But we could sort of definitely still trade the $2 range or whatever it is sort of through here. But not a real sort of great deal to take away from this at the moment, other than, as I said, those two sort of upper and lower zones there. The falling resistance, it is holding here a little bit, but it's not really something that it's because sort of like it's getting very tight against the edge over here. Yeah, no, I wouldn't be banking a whole heap on this sort of falling resistance. I sort of, if it breaks, I don't think it's like, oh, well, hey, we've got the breakout here. I think these horizontals are the ones that we need to look at. All right, moving along, we got the dollar, and which chart were we using here? Again, problems. I'm going to mark these ones up to which one I'm actually doing day to day. Yeah, this is the one that we sort of had a look at yesterday, and this is pretty much exactly kind of what I mean. Look, these aren't, this little line here isn't drawn in for the point of necessarily being a direct path, but the idea up, down, chop, 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 boom, boom, boom. So it is kind of holding this big zone here to get right up to the high time frames of it all is kind of like a weekly zone. Have a look here. You can see this is quite an important area for the dollar to hold, and hence you're getting a bit of a rejection through this area here. It isn't really anything too much to sort of talk about at the moment. I think you've got to clear 96.70 to see any sort of little bit of a squeeze up over here. Even once you do get up over there, it's a 97 is kind of the level that it's then sort of looking at. Again, NFP tonight, I don't think we're going to get much movement prior to that. Maybe just a little bit more chop over here, but I would be surprised if you get above 96.70 or 96.80. And also, I would be surprised if you break down through here. But as you can see, the dollar just got absolutely pulverized on Monday. Mostly sort of sat sideways overnight. Where we at here? Yeah. So mostly sort of sat sideways after that big sell down here, but. Yeah, this thing got hammered. Just it was just headline after headline, and it's all just, you know what I mean. Like it's all just garbage stuff as well. It's not like, oh, data's come out, or no, like there's been a ruling. None of this sort of stuff. It's like, oh, headline that Besant or whatever his name is has come out and said that yeah, don't be afraid if the job numbers are bad. oh, quick, let's dump the dollar. Like, you know what I mean? Like it's overreaction kind of sort of stuff. It's justification of headline said this maybe, but it's not like the job numbers came out and it went bad. It's somebody just talking and the market then going, oh, okay, let's sell this down here. Or there was another headline about sort of China uh, warning against Chinese companies owning too many US treasuries or something along these kind of lines, which, you know, what I mean, you would have thought affects the tens a little bit more. I suppose the tens are actually on their arse here as well. So, you know, it's not what I call sort of landscape changing kind of stuff at this point. Certainly, I mean, you got to respect the fact that it just got absolutely dumped. But again, because it's not what we call sort of landscape changing kind of stuff, I think there's a chance that should the data come out and be not as bad, that you do see this thing sort of go, oh, hold on, wait, maybe we overreacted, and you move back up to the top side here. You know what I mean? Like if you're pre-positioning for bad numbers, hence you sell it down like this, and then sort of like the numbers come out bad, well, you've already sort of positioned for that. And just sort of point out something here as well. Uh, See what I mean with gold? Yesterday I said this 2 seconds ago. Yesterday they smashed it down. You know what they do? Open up and they move it up here today. It's just shot back and forth. It's really just, this is kind of garbage trading sort of through these points here till we get a bit more of a confirmation of stuff happening. Um, Look, basically we've got this little sort of falling resistance here. Which we're on. This little falling resistance here might give us a little bit of something to work off for the dollar. But as I said, I think sort of the area that it needs to get above is 96.80 and then 97. Till you can break those two levels, really you're just in for just more sort of chop chop. All right, moving on, and we've got Aussie. And Aussie actually held up quite well, all things sort of considered, I suppose. But you can see it's building itself a little zone just up the top over here, which we can, something we may be able to potentially work off here. Obviously a smaller little zone here, but came down perfectly from the sort of sell zone here. Broke through, retest other side, maybe whatever. It's just a second effort. You've got a lower high here, basically. Um, though, as you can see, it's just refusing to sort of break down. It's one of those things that's sort of like, here we go, coming back, and then chop, 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 chop around, what, between 90s and 60s. And like I haven't actually sort of touched on it for a while and that, but sort of, I've always sort of said with Aussie, there's those repeat levels that just work time and time again. And 90s, 60s, and 20s are very much the levels in which you sort of start to see a potential profit taking or sort of reversal efforts kind of thing. And as you can see up here into the 90s, comes back here to the 60s, 90s, 60s, bang, 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 sort of bounces around here. I still think that potentially if we are going to go higher, we may see a bit of a shake first. If that play with metals does work out, if we do see a test of those lower levels before going higher, then Aussie will break as well. But it doesn't mean that sort of Aussie's necessary. It doesn't mean game over for Aussie by any means in that, but it does sort of just mean potentially we see at least that sort of, 70 30, 70, maybe the 70-20s and that sort of, as we can see here, 70-20s was the launch pad to sort of come back up to the top over here. But I do think there's more potential for a break higher and a better risk reward buying it from these levels down over here than there is necessarily buying it as it's just at the top over here. Look, I could be wrong in this thing. Obviously, could just sort of break out and pop up to the top side here. But again, I think we're just going to be in for another day of chop, just with this sort of data coming out here tonight. Like the jobs were massive for a long time. I mean, NFP is always going to have a fairly strong implications across the market. But like the last 6 months, the jobs were really at the forefront. It seems to have dropped off a little bit in sort of severity of it all, but obviously, sort of at the moment, we're sort of seeing more and more of that kind of stuff. We got this new Fed chair coming in May. He's supposed to be a hawk, but he's Trump's appointee, so Trump wants sort of super weak or super low rates and that, so which will be weak dollar, so that means more cutting, so it means weaker US dollar, hence all this kind of weakness that we're seeing through it all. I mean, it's not just that, but that's a big part of it. Um, So you know what I mean? Like that's the sort of fear. So if you have the reason that it's selling down so much in that is the idea that if you have weak jobs, then they need to sort of do something to sort of stimulate the economy, and they do that by at least not raising. They're not about to raise rates at the moment, but more likely in the cut side of the camp than they are into the hold side. So it's important to sort of understand where the central banks are at, and they're either going to be in a hold hike or a hold cut. And if you're in a hold cut, well, then sort of obviously the hold in that sort of instance is a bit more of a hawkish kind of tilt because the market's potentially looking for a cut. So a hold is, seen as a bit more of a sort of hawkish move. Whereas you take RBA, for instance, and where they're in a hold hike kind of situation. And if they sort of hold, well, that's actually seen as a bit more of a dovish kind of sort of take on things as well. So it's important to sort of know where the actual central bank's outlook is at that time. But anyway, regardless of it all, straight on the chart, a break below 70.60. I think you're sort of targeting 70.30s. See what the buyers do at this level here. Like I said, if we see the buyers sort of step up their sort of assaults over here, and we see a rally off this sort of 70.30, 70.40 kind of area, I think that's a bit better idea that we're going to get this move down here to then potentially give the breakout over there. But look, again, because there's that data coming out tonight, there's a good chance we just consolidate up at the top over here. So let me just pop these here. That's going to be your break north. Those little up candles. Move through here. Move through here. But as I said, this needs down candle here. That needs there. Look, downside as well, if it does go through here, so a close underneath sort of like 70, even though you got a little bit of a support level down over here as well, without getting too choppy. I think that for your downside, I think that's probably more what you need to see this thing break down. A close underneath back towards sort of 67. I wouldn't necessarily use this here. I reckon this would be that'd be that kind of sort of bounce that you're potentially looking for that there. For another leg down, I think a close underneath sort of 70.10 would then sort of open the door for sort of like mid 60s and basically just a continuation of the range. But in the short term, a close above 71, a close below 70.60. All right, and finally, let's just move on and have a look at Aussie yen. So this one actually played out a lot better than pretty much anything else yesterday. That unfortunately, you got to back your horse in that, and I went with Aussie US short when I really should have listened to my own trade idea here, which was basically reject from this area because we want to see consolidation around this area here, and we dropped like 1.5%, 160 points we dropped just from yesterday's analysis video where I was saying, hey, look, it doesn't feel right to be breaking out at this point, and yen firmed up, and then bang, obviously whacked Aussie to the downside there. So as I said, sort of like, Aussie as a whole is still quite sort of strong at the moment. You've got reasons to buy Aussie just given the central bank outlook, given the sort of jobs numbers that we have here, the unemployment numbers. So fundamentally, Aussie is still relatively strong. But of course, yen is one of those things that although it is incredibly weak, um, should the market come for it, I think they come for it quite hard. It is a strong current, like, I don't know, it is a high demand currency. It's just that, the from the actions of the BOJ, it has been so incredibly weak. And this is the important thing that I keep sort of saying. You've got to know what the central bank are doing. Because if you get on the wrong side of what the central bank are doing, you can see what happens with the yen. I mean, this is just Aussie yen. But, all this kind of stuff here, this isn't because Aussie is such a great currency to be involved with. It's just because the BOJ is so woefully pathetic at what they do. You can see this is where they intervened. And see, they intervened and it drops 17%. This is over like a 4-week period. Obviously, bang, we're right back up to the highs over here as well. Anyway, point is that where we're at right now, it is looking to consolidate above 40-year highs. These levels over here that we're at the moment haven't been seen since 1990. That's how high we are with the Aussie at the moment. And there is potential, should they sort of, not really come to the party, for it to go higher. Now, there's some argument for the other side of it all, since they've had this sort of new, I can't pronounce her name or whatever her name is. Anyway, the new lady elected. Um, and that although because she's very sort of pro spending, so spending more and she obviously more money in the circulation, which is then effectively, if you play it out, it's weaker for the currency. Yeah, it's like a dilution of the currency kind of thing. But at the same time, I think you got to factor in, and this is a little bit above my sort of pay grade with it, but the idea of stability over there as well. And yeah, I mean, look, Japan's still, I think, third or fourth largest economy in the world. So although they've hit, like, multiple decades of sort of stagnation, basically, they are still a powerhouse economy. Hence why when they come for it, they do come for it fast, the currency. So, it doesn't mean that sort of the yen necessarily is going to weaken further and go up over here. But certainly, should we get a close above, 110.80, 111, a close up above here, it does signal that we are potentially going to these major levels, 114 and 116. But as I said, what I would want to see, even if we were to sort of go up there, is a consolidation through here. Because as you consolidate sideways, same as I was saying sort of with silver, but obviously this is on a higher time frame, you're going to get a lot of people trying to short this thing as long as it stays below the highs. So what do? They put their stops above here, and that feeds the break to go higher. Should the longer it sort of stays in consolidation. So think about it, you go up here, starts to move down. Oh, caught the short, put the stops here. Comes down, moves up here. Oh, coming down, put the stops up over here. So the longer you're in the consolidation, the bigger the impact is going to be once it does actually break, should it break. The downside of this is probably if you sort of actually maybe give up this little trend through here, even then you're still looking at these levels over here. I don't get this one out of here. That's kind of like, as long as you're on the top side of this sort of rising support through here, it's still buy the dip sort of status. So yeah, I mean, it's a scratch off sort of 40-year high. So anyway, long story short, I think sort of for the time being, maybe a little bit more sort of consolidation. If we do see that, obviously sort of see a little bit of sort of Aussie strength, and you probably see that across on the Aussie US there as well. But for now, I think this is just going to sort of sit back and forth up the top over here. All right, that's it for me. Actually, one sec, just before I do go, may as well sort of look at the data. Quick thing overnight, retail sales came in weaker. Where we at? Flat across the board there. Obviously, sort of again, you play these things out. Weaker retail. Well, what does the market perceive this as sort of being? Well, people haven't got money to spend. So could they sustain a hold? Because obviously they're looking at hold or cut at the moment. The idea is no, they'd lean more. That'd be a bigger tick in the idea that no, we need to sort of loosen rates and that to sort of help stimulate people to have a bit more money to spend a bit more. So the retail sales go up, which helps the sort of the companies and the GDP, that kind of thing. So dollar, another one got whacked off that. Tonight we do have, as I said, NFP 50,000 up to 66K. So just a little quick one with this one is that obviously all these numbers are very low. But I did hear a guy talking about it, and I don't know how much truth there is to this sort of thing at the moment. But because they've actually sort of got rid of so many people, which are these sort of like unskilled, I don't know, migrant workers, I don't know, whatever. There's a large segment of the market apparently that just obviously have been booted out, basically, that you need to recalibrate where the numbers are. So low numbers, maybe this is what he was talking about, but if we sort of if we have a look at sort of where things have been here, I mean, this is 21, so we don't exclude that kind of period here. But as you can see, sort of even through this period here, you're kind of hitting around this 250 area as an average. And then obviously sort of since May last year, it's just gone whoop, right down. So it looks shocking. It looks like they're not doing anything here, but maybe what we need to do is instead of looking at this, 200 to 250 average, look at maybe sort of, 50 to 100 averages. and then that could be how the market sort of like implements things. And certainly a lower number here is just going to see the dollar get smacked down again. All right, that's it from me.